a weaker Asian dollar or Asian currency in general, the Asian dollar index, the fact is that has a very direct correlation with Asian stocks. So when we saw during the third quarter of 2024, when you had a strong rise in Asian currencies as a whole, most Asian equity markets did very well during that period. The correlations between having a strong Asian currency and also strong Asian equity markets, it's very high. Now, if the US dollar remains to be very strong because of the limited impact when it comes to not having interest rates being cut, that will have a very deep impact. And that's why, if you look at so far year to date, we've gone through now the first couple of weeks of trading here in Asia. And the fact is that it hasn't really been that strong, because now assumptions are that the US dollar potentially could strengthen or remain at elevated levels for the foreseeable future, which does have an impact on most Asian markets.
You mentioned Trump's tariffs, you mentioned inflation, and also what that could mean for the course of the Fed. I mean, let's just take last week for an example. We kicked off the start of the week with some reporting suggesting that those tariffs might not be as impactful as perhaps some had been expecting or pricing in. And then we had Trump very quickly sort of downplaying that and saying that that report was completely false. And then by the end of the week, we had reports suggesting that he could be declaring national economic emergencies in order to implement them. I heard a line saying that, you know, investors need good chiropractors in this environment with all that whiplash. I mean, then what's the prescription here as far as the investment strategy?
It's tough, right? And that's why, because we don't know exactly what will be implemented over the coming few months.
Right.
And also at what magnitude, to which particular countries, and also how quickly will that be, you know, sort of implemented as well once it's announced. So because of that, we're only seeing a lot of market volatility, right? Market volatility, especially during this next few months, is going to be very high because constantly, as you mentioned earlier, there's going to be a lot of noise in the market. There's going to be huge amounts of swings in terms of, you know, what potential, you know, changes there can be. And so as a result, that's why you have to be a bit more careful when it comes to what you're investing in at the moment. That's why I mentioned earlier about when we talk about investing in China, focusing on more sort of the high dividends, higher yielding plays at the moment, because of some of this uncertainty. When you're right now in a situation when you're having high beta levels within your portfolios, the potential is that because you have such high volatility, the swings are going to be really, really large. And so going into some of the more lower beta names in terms of some of the higher yielding stocks at the moment, or thematic where sort of you have a tailwind to help policies help support specifically those particular sectors or companies, those are really the companies that you should be looking at least for the next few months. Have this news and have a lot of this information. Once we digest it, once we know exactly what the implications are going to be, then we'll know, right? As I mentioned earlier with the assumption with China, 4.5% GDP, but that's only assuming, you know, you're getting that 20% kind of tariff. But if tariffs goes much higher, that's going to have an impact in terms of overall what the economic growth is, not only just for China, but also for a lot of the other countries as well, because China might not be the only country that's impacted.
Yeah.
Other Asian countries can also be in a similar situation with these tariffs.